Alright guys, so today we're going to go over market structure. This is the first day of the boot camp, dealing with that first confirmation. Now market structure is just the overall trend in which the market is moving. And so market structure is very important to understand, being that it is our first confirmation, our most important. And you'll understand why it's so important. But I will say, if you can master seeing structure, while the chart looks choppy, or when the chart looks super clear, you'll be very dangerous in the market, right? So let's go ahead and start off with our trends that we will see that when it comes to looking at the market. Right, so our first trend is a bullish trend. Right, now a bullish trend consists of higher highs and higher lows. Right, so let me go ahead and mark it up for y'all right here. Right, cool. Right, so with this is our bullish trend or an uptrend. Right, now this trend consists of higher lows and higher highs. Right, now the reason being is because you'll have this high, which is higher than this high, and this low that's higher than this low. Right, so we read the chart from left to right always, and as this chart looks, right, we'll just label what it looks like. Right, this is a low point, it's a high point, a low point, a high point. So we literally say higher low, higher high, higher low, higher high, higher low, higher high. Right, now when it comes to understanding this trend, we have to understand that this is the nature of the chart. Right, the chart will always move in this direction unless there is a break of structure, which we'll get into later. But again, we're just right now we're just kind of going over pattern recognition, right? And being that we will see this trend very often, right? We will literally just go to the charts, we'll mark it up, higher low, higher high, higher low, higher high. And this is the nature in which the chart will move. All right, now we'll get into our next trend, which is our bearish trend. All right, now this trend is just the opposite. Right, this is a downtrend, and with this trend, right, we're gonna have lower lows and lower highs. Right, here we go. Right, so with our bearish trend, we're gonna have lower highs and lower lows. Again, reading the chart from left to right. Right, these lows are steady decreasing. Right, so this low is lower than this low, This low is lower than this low. This low is lower than this low, right? And so on and so forth, right? So we have our two trends, our main trends that we see, and most likely the market is going to look like either it's going to be bullish or it's going to be bearish. And again, we'll go over examples of each, but it's just understanding that this is the nature of the chart. The chart will always move like this, right? So let's just dive into examples. All right, so clearly, right, we're looking at gold right here. Structure, this clearly looks like we are in an uptrend. Now let me just make it a little bit more clear. So boom, we'll just mark it up. Right, so we have a higher low, a higher high, higher low, higher high, higher low, higher high, right? Higher low, higher high, right? Structure should be super clean and clear like this. And so with this, we should be understanding that the chart will always move like this. Now, when it comes to understanding structure, right, we are basing structure off the bodies of our candles. Now let's get into just quick understanding what candles are, right? So these right here, these little rectangles with the wicks, these are called candlesticks, right? And at the tip here, we have what's called wicks, right? So we have our candlesticks, the bodies of our candles, and then the wicks of our candles. Now, when we look at market structure, right, now we have to go into referring back to the nature of a chart, higher lows, higher highs, right? Now what we have to understand is what makes these highs and lows valid, right? This will be for both trends. And we have to understand that sometimes we can see something that might not be clear, but we still need to understand how we decipher if it's a higher low or a higher high, and so on and so forth, right? So we would look at these candles to understand what's a higher low, what's a higher high, or what's a valid high or a valid low, right? So in this case, anytime you see two or more candles in the direction in which that higher low or that higher high is in, right, we could say that that is a valid high or a valid low, right? So our bullish candles are green, right? That's our uptrend, right? Most of these green candles is what's pushing the market up, right? And the opposite is for the red candles, right? Those red candles are pushing the market down. If we were bearish, what we would look at, I'll show you guys a bearish trend in a second, right? That is pushing the market down, right? So when referring to higher lows and higher highs, because we're in a bullish trend, right, we need two or more green candles to confirm a valid high, right? So right here we have two or more green candles. Let me adjust that. That is a higher high, right? Now, when it comes to understanding lows in the market, right here, being that this candle is a long red candle, a long bearish candle, right, that alone can be considered a low, right? Because this bearish candle is so aggressive, we can consider that a low, right? But for here, these two candles, as you can see, this one's pretty long, but it's not as long as this red candle. And plus we have our little green candle right here, so that's two or more, right? Two or more green candles, we consider that a high. Technically, if you see these two red candles, right, we can consider that a low, right? But even still, that would be following our trend, higher highs, higher lows, higher highs, higher lows, right? So two or more candles in whichever direction that we're going, right, to get our highs and our lows. Two or more red candles, that's our lows, right? So we're in an uptrend, higher highs, higher lows, higher highs, higher lows, oops, higher highs, higher lows, right? That's how we would read that. Now, when it comes to looking at the trend and the nature of the chart, right, we are judging the market structure based off of these candles, the bodies of them, right? Not the wick. So anytime we're marking up our charts to look at structure, we're drawing it from the bodies of the candles and not the wicks. Let's see here. So when it comes to understanding the nature of the chart and what the chart is doing, right? So we see the chart is pushing up and pulling back, pushing up and pulling back, pushing up and pulling back, right? We view this as a price correction, right? We'll go over that more in detail as far as what is that doing for us. But just the basic understanding that the chart is going to push, if we're in a bullish trend, right? The chart is going to push up in price, right? Then retrace, correct itself. Push up in price, retrace, correct itself. Push up in price, retrace, correct itself. Push up in price, right? Now the opposite would be if we were in a downtrend. All right, so let's look at a downtrend. Let's see. Let me isolate this. All right, so in this segment right here, right, we were in a downtrend, right? Higher high, I mean a lower high, lower low. Let me just go ahead and mark it up. Lower high, lower low. Oh. Lower high, lower low. Lower high, lower low. Lower high, lower low. Lower high, lower low. Right? Again, we're pushing down in price, correcting, pulling back. Pushing down in price, correction, pulling back. Pushing down in price, correction, pulling back. Pushing down in price, right? So again, referring back to the nature of the chart, right? These are the two trends that you will see the most when it comes to understanding structure, identifying structure, right? Seeing this is our first confirmation to know if we are going to buy or sell, right? So now let's get into our third trend. That is, it happens, right? But when you see this trend, we don't trade, right? This is a no trading trend. We have to wait for the market to either be bullish or bearish, right? Doesn't matter which one. Being that, you know, sometimes people can think green is good, red is bad. That's not the case when it comes to trading. It's all price, right? You see the price is buying up or price is selling down, right? The concept, the basis of trading is that you want to buy low and you want to sell high, right? So you want to sell. If we're bearish, right, we want to sell at these highs, right? If we're bullish, we want to buy at these lows. But again, we'll get more into that, you know, further down the line, right? So let's get into our third trend, right? Now this is our consolidating trend. Now with this, change the color. Now with this, right, the chart is not clearly going in one direction, right? We're not clearly pushing up and we're not clearly pushing down, right? We just keep maintaining these highs and these lows, right? And what this is that as far as buying or selling, like let's say, all right, we buy low and sell high. So if let's say we bought at a low point, right, the chart is at this scenario, we would expect this to keep going up and up and up, but then the chart reverses and sells, right? So this is, when we see this is purposely designed to do the opposite of what people think that the market is going to do, right? This is all pump fakes. This is what we call pump fakes, right? You want to buy low, you think she's going to keep going up. Nope, she starts selling down, right? All right, cool. Let's try to get into sales, right? We keep thinking it's gonna go down and down. Nope, pushes up, right? This is designed just to sweep people out, right? Now this deals with one of our other confirmations down the line, which is called a liquidity, right? So it's good to understand and identify consolidation because we use this to trade. However, we don't trade when this is currently happening in the market. And well, we can look at some examples of this as well, right? But again, that's just understanding the three main trends that we're gonna have. We're gonna have our bullish trends, our bearish trends, and consolidation, right? Now let's go see if we can find an example for consolidation. This is all clear. Let's see. Boom, perfect right here. All right, if you can see in this area, we're not getting clear push-ups or clear push downs, right? This is all, you know, we got our high right here, then our low right here, then our high right here, then we just got, you know, just consolidation, right? We just wouldn't trade in this. This is not, it's not clean at all. You want structure to be super clean, right? Very key, right? You should not want to guess what the trend is. You should very easily be able to tell, okay, yes, we're in an uptrend, we're in a downtrend, right? All right, cool. So now let's go into what would make the charts change trends, right? Because we know that, all right, cool, we have the nature of the chart, right? Now we understand that the chart should do, right? It should either be bullish or bearish. But when would the chart change, right? When would it change from a bullish to a bearish trend? Right, so let's go ahead and draw this up. Right, so again, going along with the same concept, higher highs and higher lows, right? We see here, we would call this, let's go ahead and mark this up. Right, this right here, call this a break of structure. Now, let's look down here. We have our higher lows, higher highs, higher lows, higher highs, right? Cool, that's for our bullish trend. For our bearish trend, lower high, lower low, lower high, lower low. Now let's look here, right? Lower high, higher low, higher high, higher low, higher high, higher low, higher high, lower low, right? Now this low is lower than this low, right? All price, all the same thing. You know, if we're trading gold or NASDAQ or whatever, right? This would all be on the same chart. But as soon as we get this push down, this break of structure, right? This low becomes lower than our last low, which means now the chart has permission to go the opposite way. Now we're going to create a lower high and a lower low and a lower high and a lower low, right? So these break of structure is what causes the trend to turn from a bullish trend to a bearish trend or vice versa, right? So now we're going to look into examples of when that happened, right? So let's pull up the chart here. Let's see. All right, so let's look at this, right? Two candle close, lower low. A lower high, right? Clearly, we see our trend if we're going from left to right, it was moving down, right? So we have our lower high, lower low, lower high, lower low, lower high, lower low, right? So now, lower high. Now here is where we get our higher low, right? Because now this low is higher than this low. And then here we have this high is higher than this high. So now we're getting the start of the break of structure. Now at this point, the chart has permission to go the other way, which it does, right? See a dip down, right? Price is fighting to change direction, but it does, right? Now we start creating higher highs and higher lows, right? We started off bearish, then what do we see? Price break, creating higher highs and higher lows, and then we're getting somewhat of a breakdown again, and then a breakdown back up, right? So just understanding the nature of the chart can be so important, because it's going to determine what you're going to do, if you're going to buy or sell. Because mind you, let's look at the times, right? It was a downtrend from about 6:45 a.m. to 10 a.m., right? So in between that time, you would have been looking for sales, right? You would have been looking for price was going down, so you're looking for sales, right? But then it switched. So from 10 to 3, right, you could have been looking for buys, right? So that's how that works, right? These trends occur over time, and then it'll give you a long enough time to catch that trade, right? It's not like the trend is just going to trade back to back to back to back, because if it's doing that overall, that would most likely be a consolidating trend, right? If it's just kind of ricocheting back and forth so fast, so quick, right? You wouldn't want to trade in conditions like that. That is purposely designed to sweep people out, right? Cool. Alrighty, so now let's get into time frames, right? So the purpose of time frames is to view a structure within well, let me back up, right? Another thing about understanding candlesticks is that these candlesticks form in different increments of time, right? So if we're on a 5-minute time frame, that means it takes 5 minutes for each of these candles to form. So we have this candle 2 p.m., next candle 2:05, candle after that 2:10, candle next 2:15, right? So these candles form every 5 minutes, right? And it's the same for each of these time frames. Now when it comes to my bad, I was clicking through these time frames. Let's go back, right? 11:30, we're on a 15-minute, right? We have 11, 11:15, 11:45, 12, right? Every 15 minutes these candles form, right? Now the purpose or the reason behind that is that you have to understand that when it comes to reading a chart, right, all charts is just showing us data, right? It's display. We're looking at data, right? And these charts are collecting data over periods of time, right? They're collecting price at certain times throughout the day, throughout the years, etc., right? And we're looking at these different increments to see, okay, when is price going to break structure? When is price going to make the move that I want it to make, right? We can look all the way up at the 1 hour, right? We can look down at the 3-minute. So when it comes to entering and exit trades, right, we are going to enter trades on a lower time frame. And reason being is because if you were to enter on these higher time frames, right, again, you will have to wait hours for structure to form, being that these candles form within an hour. Each and every one of these candles, it takes an hour for the next candle to form. So we're going to enter the market on the smaller time frames, right? But we want our higher time frames to align with what our lower time frames is showing. Now it may be a little bit confusing, but we're going to look into why that matters, right? So first, when it comes to understanding time frames and structure, right, our higher time frames trumps everything, right? So if we're bullish on the 1 hour, right, that is the true nature of the chart, right? But you can have bearish structure on a lower time frame, but it's because, right, we're dealing with smaller increments of time, so we're collecting much more data on these smaller time frames. But that works to our advantage, because being that we are day traders, we can get in and out the market much faster, and structure is going to break first on a smaller time frame. Now let's go back into these breaking structures real quick so I can get you guys to understand how to trade efficiently. Right? So again, if we understand the concept of buy low, right, and sell high, right? If we look at the nature of the chart and have a good understanding of market structure, we would understand that the way to capitalize on trading the most is to catch the first move after structure breaks, right? For example, if you bought down here at this price, and this price keeps going up, going down, going up, going down, going up, right? And you could hold this price until it gets to this highest point, right? You would have made more money than the person who bought at this low or this low, right? Because you've been holding price for so long, right? This point never gets below this point. So let's say if this was $10, right? This is 20, 30, right? You would be the price would increase at each point that these lows would be created, right? So I could hold price from $10, then I could add on 20, right? Now while this person is entering the market at $20, you have gained that, right? Just for an example, and I'll show you the breakdown of each candlesticks, the value, etc. But this is just understanding that when you can catch these trends early, right, you can maximize your trades. The goal is to trade as least as possible, but be most efficient. That's why understanding structure is so important, right? You can still enter this trade if we're in an uptrend, right? It just wouldn't be as efficient if you catch that first move, right? Again, it might be a little bit confusing. We can go over it more, but if you could understand that concept, that'll save you guys a lot of time. Save you guys a lot of time. All right, cool. So let's get into these different time frames, and I want y'all to see if y'all can catch something. Right, so on this candle, right, that's 10 a.m. right, on October 2nd, right? So we have a long candle that represents 10 a.m. the hour. But if we go down to the 5-minute, October 2nd, let's look at 10 a.m. right? We have 10 a.m., 10:05, 10:10, 10:15, 10:20, 10:20. Do y'all see how this one candle represented 10 a.m., right? But if we look down at the 5-minute, right, we seeing much more happening at 10 a.m., right? We're seeing 10 a.m., 10:05, 10:10, 10:15, right? So price is going to form a structure, right, within a structure. Hopefully that makes sense, right? This candle is a representation of the hour, right? But this smaller structure, right, is a smaller representation of what's happening every 5 minutes. Which, if I'm in a bullish trend on the 5 minute, right, I'm just waiting for structure to break to the downside so that I can catch a sell, so that I can align with my higher time frame. And we'll go over that some more, but that is the basis of understanding structure, right? Is that you can have structures within a structure on your lower time frames, right? But your higher time frame trumps all. Also, when you look at these, when you look at market structure on a smaller time frame, right? Much more candles. You're going to see much more consolidation on a smaller time frame, right? We have a saying that if it isn't clean, change the screen, right? These candles are forming every minute, so it's much more rapid. Boom, 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 right? Each time frame you click up, the chart gets clearer and clearer and clearer, even more clear, right? This is so important, guys, because again, a higher time frame trumps all, right? If it isn't clean, change the screen, right? Structure should be so clear to understand, and this will help you as a trader when it comes to understanding, okay, I want to be in the buys, or overall I want to be in the sell, and I'm just waiting for my smaller time frame to align with what I'm seeing on the higher time frame, right? Cool. Let's see. So also, right, when your time frames are in alignment, right, when you have a lower time frame that's in alignment with the higher time frame, same thing as I was showing earlier, right, you can hold a trade, right? The reason why you want to be in alignment with the higher time frame is that if you, let's say we have a breaker structure on the 5 minute, right? Let's say in this scenario we're supposed to be bearish, right? But on the 5 minute we were bullish, and then we finally broke structure to the downside, right? In our 1 hour is showing a bearish trend, right? Once we've aligned time frames, now I can hold my trade much longer. Why do you say that, Aaron? Well, let's look at this. This candlestick, right? Now let's talk about pips for a second, right? And then again, hopefully this will make sense. Again, this is very new. So you know, for the first couple of weeks or the first couple of days, right, this just has to be repetitive, right? We'll have more and more lessons as we go on. But again, this is just getting a foundational understanding of the power of trading, right? Getting into the power of the strategy, and then just understanding, you know, a concept somewhat of the charts, right? So let's get into it. So this tool right here helps us measure pips, right? Now pips is like cents, right? It's the unit of measurement that's used to understand, you know, the value of each candlestick, right? So if we look at this one candlestick, right? This one candlestick is 522 pips. Now, 1 pip equals $10 for gold, right? Each currency that you trade or commodity that you trade, right, they have a different value per tip or per pip, right? And so for gold, each pip is worth $10, right? So if this is 522 pips, right, this is $5,000. This one candle is worth $5,000, right? But that's at 10 a.m. right? So now let's go down to the smaller time frame, right? 12-second, 10 a.m. Right? As we can see, that one candle, we marked it up 522 pips, right? But if we look at each of these candles, right? This candle right here, right? 104. That's $1,000, right? Let's see. This candle right here. Another $1,000. Right? This candle right here. Oh, nope, wrong tool. This candle right here. Another $1,000. Right? Now, this is occurring between 10 and 11. Right? Now, let's go back to our 1 hour. Right? Our 1 hour is just showing one candle. Right? But if you look at our 5 minute, right, we're just in a straight drop. Right? All these candles just drop, 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 drop. Right? So, we could see maybe candles pushing down, maybe 2 green candles push up, then push down again, right? But on the 1 hour, it's just represented by one candle. So that's why we want to trade on our lower time frames, because these will give us an entry based off the strategy. And again, you'll understand the strategy when we go over, more confirmations of when to enter a trade, right? But this just goes to show you why we enter on a smaller time frame, right? Because these candles are forming in smaller increments of time, and that gives us time to enter the market, right? Cool. Again, anything that you guys don't understand, right, questions about, again, during our nightly sessions, we will go over anything that y'all have, or just shoot us a text, call, anything like that. We definitely, guys, we want you guys to get understanding and clarity for everything that's explained. But again, we also understand that this is new, and it's just things that you just have to digest over and over and over again, right? Just studying each and every day, looking at the charts, trying to connect the dots, and then you will get your aha moments, right? When you study this, and then also, continue to get help and seek help from us, right? When y'all meet us in the middle, man, it's a beautiful thing. It's a beautiful thing. Let's see here, right? So just go over some things, making sure we're covering the basics on market structure, right? So we have our 3 trends, right? Our bullish, bearish, and consolidation, right? We understand that this is the nature of the chart. Chart will always move like this, right? Until or unless we see a break of structure, which gives the chart permission to go the other way, right? When it comes to our candles, we're judging structure off the bodies of the candles, not the wicks, right? And depending on if we're in an uptrend or downtrend, right, we need 2 or more candle closes in each direction for a high or low to make that high or that low valid, right? So if we looking at a higher high, right, I need 2 green candles to justify that as a valid high, right? If we're looking at a higher low, right, I need 2 or more red candles to justify that low, right? Same thing with a lower high, right? I need 2 or more green candles to justify that lower high, and then for a lower low, right, 2 or more red candles, right? So again, that's just understanding structure, nature of the chart. Yeah. Again, guys, if you guys have questions, don't feel free to reach out to us. Don't hesitate. But yeah, that's our first confirmation. Gonna buy low, sell high. We'll see you guys in the next video.